Hi, everybody. Having lectured at the University of West London, my guest today is a regular speaker at gaming, blockchain, fintech, and investment conferences around the world. Winner of the Business Woman of the Year Award in 2024 by Acquisition International, founder and CEO of PSP Angels Group, and author of the book, Moving Money, How Banks Think. I'd like to welcome Viktoria Soltesz. Welcome, Viktoria.
Hello there. Hi. Thank you very much for having me here.
You're welcome. So in 2023, PSP Angels won the Payments Consultant of the Year Award by Acquisition International Magazine, and you also won the Most Insightful Payment Consultancy Firm Award in 2023 from Corporate Vision Magazine. And then the Best Blockchain Services of the Year in 2023 by Crypto Expo Europe. And PSP Angels was included as one of the top 10 startups from Cyprus by Industry Outreach Magazine. So I just want to congratulate you on those awards.
Thank you so much. Thank you. Very kind. Yes, we worked very hard to get acknowledged in this industry, and I'm very glad that we managed to get those awards with my team, and I'm very proud of them as well.
Great. So before we get started, I want to introduce the audience to your new book, Moving Money. And I got to agree with the critics when they say that this book is a must-have for every business. I'm actually going to make this a must-read for everyone who joins our organization to ensure they know the basics. Now, Viktoria's new book about the payments industry is available on Amazon, and it highlights the challenges in the industry, and it explains more on payment consulting work as well. So for those of you who are in the payments industry, if you don't know, you could check out Amazon. The book is available now. And the description reads, I'll share that with you real quick, focusing on perfecting the product, competing for new markets, or spending millions on marketing is all known to be necessary. But in the meantime, companies might be paying unnecessary banking fees and faking shocking operational risks without even knowing it. Planning for banking and payments are often overlooked, and this can be a very costly mistake. We all use payments in our everyday lives, but the details of how money moves or how different payments actually work are completely unknown to most of us. Knowledge is power, and if we understand the reasons and the mechanisms of banking, we can assess risks and evaluate costs better by making informed decisions. You'd be surprised how easy, yet how effective this can be. This book will show you how banks think, and it will explain all the reasons behind those confusing banking decisions. You'll learn how the history of banking has brought us to where we are today. And in this book, Viktoria is going to share with you real-life stories and struggles in which will help you to understand the complex landscape. This book will guide you on what to do and what to avoid, who to trust. And basically, this book is going to show you how to move money safer and cheaper. So I just want to say I read the book and I think it's great. And I recommend it for anybody who's in business or who has to deal with money. And if you're in the payments industry, this is definitely a must read for you. So I just want to start off with some questions for you, Viktoria. Is that all right?
Sure. Yes, sure.
Right. So when you were in Cyprus, you said that you felt like a time traveler because you saw how the same financial issues were being resolved using a different mentality and based on trusting traditional systems and classic methods. What were some of those examples that you can share with us?
Yes, I mean, obviously, when you're going to university, you learn how things should be, right? And then you get out in the real life and you can see that there are some hurdles, there are some issues, and there are different applications of the same knowledge, depends where you're going. So I actually started my career in the United Kingdom when everything was according to the rule. You know, they were very top with the technology even back then. It was 20 years ago. I don't even dare to say it was a long time ago, but this is how I started, and that was the first initial contact of the financial world and how things are done by me, right? And after, when I moved to Cyprus, I realized that even though it is still not that far, we are still, somehow within the European Union. Cyprus just joined the European Union quite recently after that. then I really realized that the same application cannot be expected of the same knowledge. And obviously, Cyprus was a smaller country. Everybody knows everyone, so it was not as rigid as I encountered in the UK originally. So, for example, there were these trust shops whereby someone just put out a bag of orange, and when you pass by, you just leave the necessary coins and just take a bag of orange, but there was no shopkeeper. So everything was based on trust. But this was applied also to the financial system. And 20 years ago, things were completely different. We just opened an account with the passport copy, with a blurry, utility bill, if anything. So there was not that much of a focus on the sophisticated know your customers or anti-money laundering policies back in the day. We didn't even know what was compliance, right? So when I started to work for an accounting company, and I started to open an account and businesses to fit them into the international flow of business and the international groups, it was so easy. I remember we used faxes, right? So when we wanted to open a company, we just faxed over the documents to the bank, and they just opened an account. It was so easy. It was a black and white photocopy of the passport of the shareholders and the directors. So it was a whole different approach. When we went to the bank, the security question was, who do you know at the bank, right? And they gave us information on the phone much easier than nowadays. Obviously now, data protection applies, and there are certain policies that you have to follow. So it was very interesting that even though the financial system is completely global, the application of that global system can be completely different when it comes to different jurisdictions. So when you're going to different countries and meeting different people, and obviously dealing with different banks and financial institutions, it is not commonly understood that what are the rules and regulations and how money moves. Obviously things are getting more and more harmonized nowadays, and there is a lot of effort from the European Union, as well as from the states, to make sure that everybody is following all the rules, and everybody is thinking in the same way, so there is no slippage, there is no creative people who can enter these systems and obviously take advantage of the loopholes. So nowadays this gap is closing down, but still we see that different countries are dealing with the same issues differently. It's different taxation, different checks, different regulations, different licenses. It's very apparent when you're going to, for example, offshore, and you see anything in smaller islands, that how do they understand financial regulations, what kind of licenses they are giving, and in my opinion, that could result in a bit of a burden when the money moves, right? Because if I've got a country, if I've got a solid banking system, I might not trust the other country and the other country's banking system, that they're doing good enough work to allow certain funds to flow into the international network. So yeah, in long story short, basically, it depends where you go, depends who you talk to, and obviously depends what kind of financial institution that you're using.
You mentioned that approaching customers based on their preferred payment method, it can result in cheaper, safer cash flows. I know as a consumer, I like to be able to pay in my currency of choice. Can you give us some examples of where you've seen this strategy used effectively in Europe?
Sure. Actually, I developed the payment framework, and this is discussed at the last page, last part of my book. Is actually a payment framework which can be applied by anyone who is dealing with international money movements. It's very easy. You really need to understand what kind of companies you have in an international group, because different rules and different regulations apply to different jurisdictions, right? So if you have a company, for example, in Hong Kong, you're under different rules than if you have a company in the States, and it's different when you have a company, for example, in Germany, right? Now, because there are different rules apply, you are most probably might use different banks who are handling your assets and funds. Now, all these banks are also under different rules and regulations. And when we are talking about fintech, one part is the fin, but the other one is the tech. Obviously, the technological advancements is something that you also need to pay attention to as a business owner. So there are a million ways how you can move money. That could be cards, that could be bank wires, that could be wallets, that could be Apple Pay. The opportunities are really endless. But understanding who is handling your funds, who are you using, who is your bank, who to trust, who to avoid, what are the different fees, what are the hidden fees, and obviously what are the risks that it's posing on your whole international business. It is the kind of question where payment consultants and banking experts can really help you to optimize some costs. Just to give you an example, let's say that you've got a good company in the group in Hong Kong and you're taking money from the local people selling some products, right? Now you want to move this money to the US, right? You want to pay out your shareholders, you want to make sure that the money flows back to the headquarters. Now, immediately you need to understand who is handling your money in Hong Kong. What is the risk that you're taking by using that bank? Have you ever went back and negotiated the fees? Or your company is different now, your volumes are different when you opened that account maybe 20 years ago. What is the currency? Obviously, it's Hong Kong dollar. Now, how the money moves to the US headquarters also poses a lot of questions. Is it within the same bank? It is a different bank. Is the different bank happy with the source of funds, which is coming from Hong Kong? What is the fee? What are the terms and conditions? How long do they sit on your money? Because many times it's not instant. So you're sending the money on Monday and good if you're receiving on Thursday, right? Where is the money in between? What is the risk that you're taking with that bank who is providing those services to you in the US? Who is doing the exchange? Why are you trusting that provider to give you those rates? Maybe you can get much better rates elsewhere. So these are just a couple of example questions that you need to ask yourself before you make a final decision of how to set up a whole payment and banking plan, which is affecting the whole international group of companies. And unfortunately, what we have seen that there are a lot of companies who are not even paying attention, not even asking these questions. I use the bank what I opened 20 years ago. Why? Because I know them, I trust them. I never even thought about there is an opportunity to go back and renegotiate the fees or getting better terms and conditions. Or nobody's really doing hedging. And this is a big problem because the treasurer's job in an international company to take care of that. But many times they don't even have a treasurer. Many times accountants are dealing with that. And I'm an accountant. We were never taught on Visa and MasterCard fees and interchange. And I didn't know anything about, chargeback. So if I don't have the relevant education, how can I apply it and handle other people's money? And this is the main problem. You need to understand what are those questions that you need to ask to make the informative decision, how the money moves, and obviously know how banks think.
Yes, okay. In the book, you discussed the climate of economic uncertainty right now and how the global economy, it's still searching for an effective monetary system which can promote sustainable growth and stability. Why do you think that is?
Right, we need to go back a bit to understand that where we are at the moment is the result of all of those historical happenings at the past. So after the Second World War, there was an absolute mayhem. There were countries in shambles and everybody was broke. So to restart the international trade, countries agreed that, okay, guys, we need to come to a conclusion that we need to use some kind of common understanding. What is the common value that we restart the trade about? Because if we think about the Japanese yen versus the Chinese yuan and versus the whatever Hungarian forint, it would have been absolutely crazy if there was no common understanding that what is the common value here and what restarts the international economy. So obviously, United States came out and they said that, guys, trust me, I've got the strongest economy, use the dollar, and just to sweeten the deal for you, I'm gonna make sure that my dollar is always worth 35 cents. So whatever you want, I can always give you the gold in the same value, which is pinned to the dollar value. So anytime that you want to keep reserves, anytime that you want to trade between each other, just think about the gold as an underlying asset and use my currency as a dollar. And it worked absolutely perfectly. It was working for about 20, 30 years, and the economy started to boost, they started to rebuild themselves, and they started to trade again. Now, unfortunately, back in 71, Nixon said that there are some speculations around the dollar, and someone is trying to take advantage of being the dollar pinned to the gold. And for this, temporarily, I'm going to unpin this. I'm not going to make exchangeable that anytime that someone comes with the dollar, I'm temporarily not going to give you any gold for that. Now, obviously, there were a lot of underlying reasons for that. The whole economy was lacking on a lot of gold. Some countries started to hoard gold to manipulate the dollar. So he was not wrong on that. But this resulted that right now, the dollar, which is the basic currency of the economic trade, is backed up by nothing. Backed up by the state is saying that, trust me, it's good enough for you to handle the international trade. And this is where we are today. So the whole financial system, anywhere in the world, and it's not only for the US dollar, in any other currency, the value of the currency is how good the economy is, which is backing up that currency. Is it perfect? Now, obviously, no, far from perfect. And we can talk about it for years if you want of the different opinions. But the summary here is that there is a financial system which is very fragile. And the whole thing, the whole system is running on trust. So everything what we are doing and every step the bank makes and every decision the government makes what affects the economy of a country is to safeguard this system. And this is why we see in case that there is a bank failure, the government comes and bails out the bank because it's still cheaper than start the whole system from scratch and start to come up with something from one day to another to replace the existing system. It is not perfect. Yes, there are a lot of opportunity where we can make it better, but this is what we have to work with. And your responsibility as a business owner or an accountant or a treasurer or anyone who is handling funds is to at least understand why are we here today and why the banks are thinking in a certain way. Because we need to safeguard that financial system. We need to make sure that people still have trust in the system and they not start to run and claim back their money from the bank. Because as we know, the bank already lent this money out. So if everybody goes to the bank at the same time demanding their money, this is what we call a bank run, the bank is going to collapse. And obviously that's a huge jeopardy for their operation. So all the decisions what banks are making is to safeguard this financial system, is to maintain the system somehow. Of course, it's not an easy job. And also to maintain a healthy society whereby everybody is paying their taxes, no one is committing crime, and there is still trust in the system. So in a nutshell, that's the reason why we are here today.
So that leads me to my next question. What do you think is the solution to finding the optimal global monetary policy or even reserve currency?
It is very hard because there were a lot of challengers for the dollar and tried to become the reserve currency of the world. And as we saw that before the Second World War, the reserve currency was whoever was the strongest, right? I trust France because they took over half of Europe. So now, their currency is good enough for me to trade because my country might collapse, but look at them, they are doing well. So I would rather trust them. So this is the whole idea behind the reserve currency. So the challengers until now was the euro. Obviously, that's one of the reasons why the European Union started and created this common market with the common currency. It might be, but it's still far from the being the leading currency and the ultimate trust point of the world. Then we were thinking about the Swiss franc, which is very strong economy, but again, it's a very, very tiny country. So maybe putting all our trust in such a small area, it might not be the best. And it was the Japanese yen. Now, the thing is that the alternative side of the world, which now the developed countries are having a massive disagreement with, are trying to come up with an alternative currency, which is the BRICS. And this is the shortening of the first letter of all the countries which are under the BRICS, which is Brazil, and we've got India, and Russia, and China, and South Africa here. And there are more and more countries are joining the BRICS. It started as somewhat similar to the European Union, saying that we are trading with each other, we trust each other, it's a good common market, we are enhancing each other's economy. But now they are really thinking about launching an individual independent currency, which could threaten the reserve function of the dollar. Obviously, I can't tell the future, otherwise, otherwise, I would be already retired in a small island with a pina colada in my hand. So I can't tell you what's going to happen. But definitely there are some interesting things are happening on the market, and some say that maybe the gold is going to come back up as a reserve currency when we are losing trust in the US dollar, or maybe crypto could be one of those alternatives. I think only time will tell, and you never know how the market reacts. But there are definitely interesting times here where we just need to wait and see.
Yeah, I'm waiting to see what it is too, because I'm curious which it could be. But you mentioned too in the book that you shouldn't keep more than $1 million in any one single bank account. Can you tell us why?
Right. So we mentioned that there is a trust in the system, and the government need to make sure that this trust is maintained. So they are bailing out banks to create this trust and maintain this trust. So that means that every time when there is a bank which is holding your funds, it's backed up by the government. Now, there are different limits here. In the European Union, we've got 100,000 euros per an account. In the States, it's $250,000 per an account. So, of course, when we are talking about individuals, if you're lucky enough to have this amount of money in the bank, that's also for you. But the majority of the people don't know about it, simply because not that many people keep that much of the money at one point in one account, right? So you don't really feel the need of that. However, when you're a business and you're dealing with millions, many times it can happen that you are just placing million, 2 million, 10 million, even more, sometimes on one bank account. I'm not saying that banks are going belly up on a daily basis, but that could happen. So there might be a risk what you are unwillingly and not even knowingly taking as a business. And this is definitely a risk what you need to calculate with. So if you have, let's say, 5 million, what you are moving every month within your international business, is not a bad idea. Just at least ask the question, which bank is handling this money? Who is holding my funds? What is the risk around it? And as I say, it doesn't cost a lot to open alternative accounts, but it can cost a lot not to have them in case something happens. And it doesn't have to be a complete disaster that the bank is, evaporating or calling the shots, as we saw the Silicon Valley bank went bankrupt, unfortunately. Yeah. It's easy enough to just have a frozen bank account. And I have seen that many times. You as a business might not even do something wrong, but one of your clients might actually send something with just stupid description, for example, betting activities, and your whole account can be frozen without even being your fault. Right? It could be a mistake. It could be a competition who is looking at you with bad eyes. There could be millions of reasons, but it's your responsibility as a business owner to understand this risk and get prepared for this risk. So that means try to keep as little amount on a bank account at a given moment as possible, and use a treasurer, because We didn't even mention that when the money is sitting on the bank account, in my opinion, that's the worst place for money, right? The money should work for you. So have a professional, have the advice of what am I going to do with 5 million over half a year? Don't keep it on the bank account because you are paying maybe even negative interest on that. You're definitely paying the bank for some kind of account holding fees, but the money is losing also value. Have a treasurer, invest that money, do something with that to eliminate the risk and obviously the cost which is coming with holding that funds. So these are, again, all those questions that you need to ask yourself, and it's getting more and more apparent as the company grows and as your volume grows. Because if you don't think about it, one day you wake up trying to log into the bank and the account is frozen, and this results that there are clients for you trying to pay you when you can't accept money. This could be a really, really serious problem. And you as a business owner should take responsibility for that.
Definitely, some business owners definitely need to be taking responsibility for that. But what kind of fiduciary duty do some startups have to be aware of when it comes to setting up their merchant accounts or facilitating their payments between buyers and sellers? If I'm setting up a marketplace like that and I'm a startup, what are some of the things I got to be aware of?
Yeah, the startups are starting with a handicap, and it's not really a good position to be in. Unfortunately, no one likes startups. Why?
Yeah.
Because startups are usually broke, right? So if you're broke, I don't know if you can even make it. And many times banks are charging a percentage, or the merchant accounts are charging a percentage. And that means that whatever percent on zero, it's still a zero, right? So if I take time and energy and effort and work
No
hours
history.
to onboard you, exactly, no history, then at least I want something out of it, right? So since you're a startup, I don't know you, I don't trust you, I don't know what's going to happen, and if your business
knows
is
if you're going to make any money.
Exactly. Now the other problem here is that startups are changing their mind on a daily basis. So you start up as a bakery, you realize it doesn't work. Let's make bread making videos. Immediately it's education. It's a whole different, risk. It's a whole different category. And many times we don't really share these with the bank. And this is a big mistake, because if the bank onboarded you as a bakery, and now transition somewhat to a baking school, online webinars and education, you do need to alert your bank, because if you don't do that, the bank has all the rights to shut your account because you're doing something else that you told them that you will do, right? And also exactly. because startups need to stay afloat, it doesn't have to be that sharp of a change. It could be as easy as we just fired the director yesterday. We've got a new team member and we forgot to alert the bank about it. This could be seen from banking perspective as a bit of fraudulent, because you always need to declare who are your key personnel, what are they doing. Maybe someone is on the on the blacklist or sanction list. Of course, the bank needs to know about that. Who is making the decision? So this is the problem with startups. Listen, nothing is impossible, because obviously startups have harder time to start, but again, with good planning and understanding what are these limitations, you can have a good strategy which is getting you out of this trouble. Usually what I say to startups, start with any kind of payment provider, start with a bank, start with something that you feel comfortable with. You've got low volume, so don't really pay attention on the fees, because the fees might not break you at the beginning, but prove yourself. Make sure that over at least 90 days, 3 months, you're doing what you're saying that you're doing. You're not committing any fraud. You are not doing crazy transfers everywhere. You declare everything to the bank. The bank understands what you do. Your volumes are steady. You follow up what you're promising to them on the business plan, and then the tables are turning. And then you have the upper hand to go back to your bank and renegotiate that. Hey, bank, remember me? You took me when I was broke. Now I've got the volumes. Give me better conditions. Give me better fees. Otherwise, I'm taking my business elsewhere. And then you can actually have the upper hand to negotiate that. And if they don't want to give you good terms and conditions, you always have the opportunity to take your business somewhere else and then open the negotiations with someone who is more friendly. And by that time, most probably in a couple of months' time, you see really what are the technological needs as well that you need, because maybe by that time you have a CRM system, so you can only have certain kind of providers. Maybe then you developed something which needs a very unique approach and only certain payment providers and banks can give you that. So it's one thing that you're thinking about this problem as a payment or a banking need or even compliance need. But since we are talking about online businesses, and nowadays every business is an online business, you also need to understand that there are technology connected to this. So speak to your development, see what's on the roadmap, talk to the product guys, and understand that how does it affect the whole business basically as a whole, from the technological perspective as well, not just from the financial and banking perspective. And this is where I see a big gap between accountants and developers and products. Maybe there is not that much of an understanding in there, and what suffers is obviously the payments.
Yeah, definitely insightful. And in the book, I really like the way you use the poker game as an example to illustrate the effects of the monetary system on the players. That was really a great analogy because, you know, I played poker myself, and I thought that was a great way to make the connection between how the monetary system works and the players in the game.
That's right. So imagine that you are playing poker, right, with your friends. So either you're using these chips or you just don't have anything at home. So you use a cup as $5 and I don't know, a fork as 10 pounds, or you're using candies or beans or any kind of alternative to represent the value. Why does that fork or candy or bean has a value at the poker table? Because everybody agrees to that. And everybody agrees that now we are connecting value to that item and we are playing the game according to those rules. It's exactly the same thing in the financial system. Why the dollar has value? Because everybody trusts this. So if I'm going and buying groceries and I'm giving the dollar to the shopkeeper has that and has trust in the government to know that if I'm taking this value, I will be able to pass it through, and then I can pay my rent, then I can pay for whatever food, because there is a commonly agreed value. And exactly in the same way as you're playing around the poker table with your friends, when the poker game ends, the value of that money out of that system is none. It's the same thing. So if you are losing the trust in the financial system and you're trying to take it somewhere else, it might not have any value. And this is the biggest threat to the financial system, that what we agree, it's very hypothetical. It is not connected to any value. It's not connected to gold. It's definitely not connected to food. So in case that the financial system is going through some shambles, what is going to be the value of some digits on a digital screen or a paper printed? And that's why we need to safeguard the financial system. And that's why we need to keep the trust alive. Otherwise, people wouldn't be able to trade with each other, and then the whole economy could have a problem.
Yeah, the book is really helpful in that fashion because you give examples and they're clear and easy to understand. And then even the most financially literate person can see some of the examples you have and then do the calculations, which I thought was great. You had an example of how to calculate what you might pay if you did collect the payment and what it would cost you based on the percentages. I thought that was really cool. So you mentioned that like neobanks, they're still in the early stage of development, and they might partner with some like established commercial banks to establish some relationships. Since I'm in the payment industry and I follow fintechs and like to see where things go and how some companies acquire the others, how long do you think before these fintech applications start to take over, you know, all of our banking? Because we've kind of seen the popularity of apps like Square and Cash App and now Zelle and all these others. Crypto is, you know, very popular with all these different coins being issued and created. You know, when do you see like fintech taking over banking from the traditional institution?
I think it's already done. I think it's already taking over everything, because even the traditional banks now are thinking technologically, because you need to keep up to date with all of these new technologies and the new demands from people, right? Because if I have an Apple Watch and it's so easy for me to do my groceries, boop, I just stop it and I paid for it. Why would I actually physically go to the bank, cash out some money, use the cash, store the cash, then I lose it, then people take it away from me? It's not only just a security issue, it's because everything is online now. You're ordering almost everything online, the food, the groceries, the shoes, everything. So everything going to be digital, and the traditional banks are having a serious headache that how am I going to keep up with all of that, because my system is still based on fax and papers, and there are a lot of files and box files down at the attic, and my system is a legacy system which takes 20 years to upgrade, to apply a new application on top of that, and it is a big headache. And that's how these new fintech companies can come in and innovate everything, because what they are saying is that we could build something out of nothing, which is following up the current demand. We don't have any legacy system. We don't need to use a database which is 30 years old, and the reconciliation software which was developed back in, I don't know, 72. But we can be a fresh breeze, which is building everything from the front end, what the client wants to see and wants to use. And this is where we are all going. Fintech is no longer just a fin, but everything is now turning into tech. So fintech is definitely the future. And with these new applications, there are new methods which are popping up, which could be either the cryptocurrency, which is very interesting, what we saw in the last couple of years, how crypto got a mass adoption and how it really scared the traditional financial system, that there is something which is out there which can be used as money, but it's not really regulated, so people can use it for tax avoidance, can use it for illegal activity. So that's what created a bit of a headache in the current financial system. But overall, this is what we are going digital. Everything becomes digital, everything becomes easier, and it's much safer as well, because right now you're losing your wallet full with notes. Where are you going to go? You go to the police, you're not going to see it back. But when you are losing your bank entry code, you can still have the opportunity to identify yourself, and the money is not lost. It's much easier to follow up frauds. It's much easier to follow up where the money goes, cut down all that terrorist funding, cut down all of that illegal activities, and make sure that everybody is paying their taxes. So this is definitely a good thing, that criminals have much harder time to hide money and cheat, which is good. But that's why I'm expecting more and more restrictions coming in the future, and more checks, because now everything is online, more digital, and more easier to follow, basically, from the regulator and from the banking regulation perspective.
Well, I'll tell you, this book, it's definitely a must read for anybody that handles money, that's in the payments industry or anything like that. Is there anything that you want people to know about you or the book, or where can they find you?
Yes, the book is available everywhere, in every Amazon store. I'm just showing you. And I would like to offer for everyone who is watching us today, the first 20 people who are sending me an email, a little promotion, that if you send me an email and you're explaining that what are your main problems and issues when it comes to payments and banking, I would like to offer a free e-copy of the book. So take advantage of this offer. But the hard copies can be found on Amazon, and I'm very happy to discuss every kind of problems or issues in this book with anyone who is interested, because that's what I'm doing. We actually have a payment consultancy, and those are the complex cases that we are specializing at, and we are explaining in real life how money moves and how banks think. So this is our special magical skill.
Well, I really appreciate you coming on. This has been like a great conversation. Is there anything else that you want to talk about? Because I mean, I'll be honest, I want to just open it up to like organic conversation because I've been asking you questions. But if there's something that you want to talk about, I would love to, have dialogue with you. For example,
Sure,
is there anything
sure,
in
sure.
news
So,
that you had
uh,
seen or heard about recently that we should know about?
yes, maybe I can bring a real life example from a client of mine who I consulted for. There was a big problem because this client was really successful in the States. And they wanted to expand, as you do when you're really successful in one jurisdiction, you want to open up to another one. So the whole idea was going to Latin America and try out the product with a smaller marketing budget. So they were looking at a pilot, smaller country in Latin America where they can launch the project. And they laid their eyes on Paraguay. Now, the problem was that in Paraguay, there is only 5% of the population back in the day who used cards, right? So it was not really a common way to use those cards. So before this client actually spent the marketing budget, the good thing that they consulted us and we explained to them that since you are having a very successful business in the United States and even your gateway, you're a payment provider, will be able to give you that card acquiring solution, even in Paraguay, you're not going to go far with that, right? Because you're spending a lot of money on acquiring those clients. They go online, they click on your product, but they can't pay. So you as a business, you need to make sure that you are providing all of those payment methods, what is needed by your clients. And in this case, it was really successful because the client consulted us and we highlighted all of those issues before spending the marketing budget. But nowadays, I just want to show that the tables are really turning. And instead of going to a new jurisdiction, spending the marketing and focus on the product development is good and it's very important, but it has to be coming after talking to your payment person, because the payment person is going to explain to you how you will be able to collect money, how will you be able to store that funds, what are the risks around it, how are you moving it back to the shareholders' pocket when you need to get a payout. So there is more complexity to it as we are growing more and more international and more global. But this is just one of the stories that it shows that why this industry is so underrepresented, but it's so needed and it's affecting everyone's business, that it's not a bad idea to start thinking about these questions today.
That's great. I really appreciate you being here. I want to thank you and congratulate you on the awards that you've got. And I want to remind everybody that your book is on Amazon and they can go read it now.
Thank you so much, and thank you very much for the opportunity that I could explain my story and the book. And as I said, please send us an email explaining what is your problem with banking and payments, and let's talk about moving money, how banks think. If you have any questions, obviously we are here to reply to everything. And thank you again for the opportunity.
No, it was great having you. It was a great conversation. I really learned a lot, and I am definitely going to be using your book as a reference tool.
Thank you.
Thank you. All right. Bye, everyone.
Thank you, everyone.
Bye.